We all make mistakes as traders. If anyone tells you they don't, they're full of it. Today, I want to share with you 10 of the biggest mistakes that I've made as my time as an option seller so that hopefully you can avoid making some of them for yourself. First up, not financial advice. This is simply what I am doing and have done based on my own individual goals and risk profile. Don't copy random strangers on the internet. Do your own research, make your own decisions, and get good at managing your own money. Now, firstly, these mistakes that I've made, I think they apply mostly for those who have a smaller account. So if you're trading with 100,000 as opposed to a million, these mistakes are just going to be a little blip in the $1 million account. But on a smaller account, they hurt. Also, if you're looking to build your account safely and quickly, got to avoid these mistakes. And if you want to live off your returns, again, avoid some of these mistakes. Number one, trading stocks whose charts have turned bearish. This is huge. I've personally found myself bag holding things in the past, and when I look back at the trade, if I just simply stopped trading that chart or that stock as soon as we turned bearish, which for me is when we failed to make a higher high, not going to be bag holding a lot of these. Things like Hood, Palantir, SoFi. Yeah, if we stopped trading those when the chart turned bearish, we wouldn't be holding them. I actually did a whole video on this. I'll link it in the description so that you can see exactly what I mean by when we don't make that higher high. Mistake number two, entering on a red day or without enough technical analysis. If you look at charts, more red often follows red. So rather than entering on a red day because premiums might be higher, I prefer to wait for a technical signal that indicates that the red has most likely passed, because getting paid a higher premium is meaningless if we come down again for the next day, 2, 3 week. You actually would have ended up with higher premium yet again if you just waited. So I prefer to enter when the next most likely move is up. Don't try to catch a falling knife. Red is always a falling knife. And on top of that too, I don't want to be assigned at a 7% discount from current trading prices if we drop 20%. That completely defeats the purpose of what I'm trying to achieve. Mistake number three, choosing strikes based off delta or support. I don't trade sold options with delta. I don't even look at it. I don't even care about it. The reason why is it's very misleading. Today's zero point 0.3 delta can easily be tomorrow's 0.5. So to say, hey, today I've only got a 30% chance of being assigned, and then you've got more red tomorrow, you're now at 50% chance. To me, it just doesn't make sense and it's never served me well. So instead, I choose my strike based off of support levels. But if I'm selling a put, I always go below the support. Why? Because support becomes resistance. So if I'm selling a put at support and I get assigned, meaning we're now trading below that support level, you're going to have a tougher time trying to get out of that because that level is now resistance. And as we approach it, we're going to drop back down. Then we'll try to approach it, then we'll drop back down. And then you end up in that trade for longer than you need to if you can exit it. Mistake number four, trading cheap stocks in order to diversify. When I look back, if I had my entire account in NVIDIA, I would have done so much better than trying to diversify. So when I hear people talk about diversifying so that you don't have all of your eggs in one basket, it's of course always with cheap stocks. So things like SoFi, PayPal, Netflix after it's split, Affirm. Quality is less risky than diversifications. Cheap stocks are cheap for a reason. This is just my take, by the way. I'm not saying go all in on NVIDIA, but consider your account. Do your own like post-mortem, if you will, on previous trades and what you've traded and see what might have been a better, setup for you. Number five, over trading. Less is more. Less positions, less often, less stocks. You don't need to trade everything. You don't need a lot of positions. What you need to do is position yourself where the money is flowing. I have on a, regular basis, maybe about 15 to 20 stocks that I'm actively watching, and I'm only entering a trade if the chart looks good. And by doing that, my mind is now not focused on 200 odd different charts every day, which is just overwhelming. I never get to know the chart well, and I never get to really get into the pattern of how that stock behaves. So for me, very much less is more. Mistake number 6, not rolling up as on a sold put. Letting a position expire worthless is the biggest wasted opportunity that I think is out there. If you are way out of the money, roll that strike up. Collect more money on the same trade, right? If you've got a sold put at $100, we're now trading at 170. Don't just let that expire. There's so much money in there if you just roll it up. Keep the same expiry, but roll it on up. Or close early when you reach significant profit. The more times you can reuse your capital, the faster you'll grow. So for me, the goal is to make as much out of each trade as possible and to close when I reach significant profit, especially if that's in, a week or two. Number 7, I wish I followed this more religiously, especially in the beginning. Not taking losses, because if you're assigned on a sold put, quality stocks will rebound. How often have we heard that, right? How often have we done that? Take the loss. Opportunity cost on a small account is significant. You need to keep your money in play. Waiting 12 months for recovery, it's dead money. Take a few $100 loss to avoid it becoming a few thousand. When I look back on anything that I've ended up holding for a significant time or any significant loss that I've taken, if I just cut that when it was at a few $100 loss, I would have, number one, avoided the thousands of dollars of loss. But number 2, I'd have made that up and more because I get to cycle my money over and over and over again. Take the loss. Number 8, not buying stock positions. When I look back over all of the trades that I've made, the most money I've missed has been by entering a sold put or even a covered call with just a few strikes higher, rather than just buying stock and letting it run for a little bit. What I look for now is even just one good stock setup per month, because it can double your returns for the month, right? When I look back, I'd have doubled my account in under a quarter of the time if I didn't just sell options. And when I say buying stock positions, I don't mean by doing it by getting assigned on your cash secured put. Cash secured puts, for me, my goal is to never, ever, ever be assigned on them. I think it's the worst way to acquire stock because you're already underwater. The only possible way that you can get a stock position on a cash secured put is if the stock's trending down. And the only way to make money on a stock position is if the stock's trending up. So I now look for a good stock setup every month, at least one that I can ride some capital gains. Number 9, following someone else's stock and or trade recommendations. Now, over the years, I have been in many, many different trading groups, signal groups, all of it. One recently, in our last downturn, they did a bit of a recap of the positions, and they were holding over $1 million worth of positions that were all underwater that had been like trade recommendations, right? Not recommendations because, we never call it recommendations, but like trade alerts, right? So if someone in that group was following these trades religiously and didn't have multiple millions in their account to trade with, they're going to be in a significantly bad position, right? Your account size, alternative income sources that you may have elsewhere, your goals, your risk tolerance, if it's different to someone else's, and it will be, this is the key, don't just follow their trades. I'm not saying don't learn from these people. Absolutely learn from these people. But know that when they enter a trade and when they give you that trade signal, their reason for trading is different to yours. Which brings me to number 10, which would have avoided everything, not creating and sticking to my own plan. So not having a trade plan that tells me what to trade. So things like what I put in there is the stocks that I will and won't trade. So number one, got to still be in a bullish chart. That's my biggest, what I stick to now is if it's not in a bullish chart, I'm not entering a bullish trade. And then also having a plan around when to enter and exit. When do I enter? When the technicals say I should. When do I exit? If it's turning against me, or to take a small loss to avoid a large loss. So I would encourage you to do this above everything else. Come up with your own plan, because this, and if you stick to it, that's the other thing, right? We come up with these plans, but we've got to stick to it. If we have our own plan, a lot of those mistakes, a lot of those previous 9 mistakes we can avoid. So my trading plan now is designed to avoid the mistakes. And you know what will happen? In the future, I'll make more mistakes. And then I get to adjust my plan accordingly to avoid those new mistakes that I've made. Now, if you're interested in figuring out how to come up with your own plan, I'd love to invite you into the 50K Club. 50K Club, there's a wait list in the description, but basically this will be all about teaching you the technicals, helping you to create your own trading plan. The strategies will be specifically for smaller accounts because a lot of the, traders that you follow here, they're trading with millions of dollars. So when they get assigned on a position, it doesn't hurt them, right? When they need to take a larger loss than maybe they should have, it doesn't hurt them as much. So what I do in the 50K Club, hence the name, is I'll be using $50,000 over and over and over and over again to trade. So you'll watch me trade a $50,000 account using options and stock positions in order to create an income. So if that sounds like something you're interested in, pop your name on the waitlist that's in the description, and once it's all up and running, I will let you know. But otherwise, over the weekend, start coming up with your own plan. If there's mistakes that you find you're making, create a plan to avoid those mistakes. So I hope this was helpful. If you haven't done so already, be sure to follow my account. If you liked this video, give it a thumbs up and definitely get your name on that waitlist for the 50K Club.